for the 2018, Africa's growth was estimated at 3.5%, which kind of remains around the same level that we've witnessed for 2017. However, we expect the growth to accelerate to 4% in 2019 and 4.1% in 2020. And this is really driven by a rebalancing of growth toward more, to be more driven by investment and net exports, which is basically an improvement in the quality of growth that we would expect going forward. And we've seen a bit of that already in 2018, so we expect that trend to continue. It's also underpinned by improved macroeconomic stability and modest recovery in commodity prices.
Okay, but when you look at debt on the continent and the way African sovereigns are going to the debt markets and borrowing funds, would you say there's some red flags? You know, are we likely to see a debt crisis in the near time if this is not effectively checked?
So, indeed, the debt levels themselves have been rising. So it has risen on average for the continent from around 34% in 2008 to around 58% in 2018. However, this remains well below the levels that we've seen at the time of the HIPC initiative. Although these debt vulnerabilities have increased, the continent is not at the risk of a debt crisis. It's given context that this rise in the debt level is similar to what we have witnessed worldwide, including in other developing and emerging markets. And this happened on the back of globally low interest rates, historically low interest rates, and the investors' search for yield. So basically, many countries actually took the opportunity to utilize this cheap cost of financing to get funding to meet their development needs and infrastructure needs and so on. Yes, there are countries that have issues with their debt, but it's not across the board. It's not for the whole continent, and there is significant variation across countries and regions. You have a number of countries, a large share of countries that actually have debt that is below 40% as a total debt to GDP. And you have a few, 6 countries that have above 100% of GDP. So there's a wide variation. There's no one debt story across the continent.
Okay. So I would like to move on to the other parts of this report.
Sure.
Now, looking at the jobs, you know, very interesting in your presentation, you talked about the importance of getting more manufacturing-led jobs on the continent, and how much does that move the needle for, you know, improving on the unemployment situation we have on the continent?
So what we've done is we've tried to look at what type of growth actually lead to the highest job creation. So we analyzed the episodes that experience sustained level of growth over 8-year period, and then we tried to look what type of sectors these episodes were led by, and then what type of impact it had on job creation. And what we found, interestingly, is that the manufacturing-led growth were the episodes that created the highest jobs, and this came not just by the jobs it's creating in the sector itself, but thanks to the interlinkages and spillover it has to other sectors, such as manufacturing and agriculture. Unlike when it's driven by services or agriculture, it just what it feeds through is the sector itself, but it doesn't have this spillover effect that actually helps create more jobs for the economy.
When you look at how, you know, the development finance institutions are engaging governments and trying to solve some of the problems that have to do with creating jobs for the continent, I saw a very interesting chart you put out there, and you listed some of the factors that are kind of hindering the growth of these companies. And interestingly, some of the higher ones you said have some linkages to government. Can you speak to how having that rapport, that open-ended conversation between government and the development finance institutions and the private sector can help, you know, improve the outcome?
Sure. So what we try to look at is we try to estimate the jobs that are lost due to constraints facing firms. And what we estimate is that around, on the lower bound, 2.3 million jobs a year is lost due to constraints facing firms. And this is at the lower bound. And the top constraints that cause these job losses relate to permits and licensing, relate to corruption, relate to courts, and relate to political instability. So all of them are really related to governance issues. And hence the need to really tackle these issues to allow the private sector to actually be able to grow and create the type of jobs that our economies need.
Okay. 2019 is a rather peculiar year because we're having a lot of African sovereigns going for elections this year. So stability on one end, we know what comes with elections around the continent. How confident are you that we're going to see smoother transitions, and create the type of stability that we need on the continent to achieve the kind of growth you were projecting?
I think the continent has done has made a lot of progress in terms of restoring macroeconomic stability. There has been, if you look over the last 10 years, in terms of lowering inflation, improving investment and saving, you can see that there has been a lot of economic reforms that really kind of improved the fundamentals over time. So what we are hoping for is this kind of trend continues, and basically successful political transitions, peaceful ones that does not lead to any economic disruption.